Welcome back to my final morning report charts appraisal on Thursday the 27th of August with me, Rich Perry, market analyst at Handtech Markets. Let's move on to gold, and we've had this move in gold that has sharply unwound the gains. The correction that I was talking about, let me just quickly show you the intraday chart to show you that little top pattern completed below 1148, 1148.50, sort of gave us $20 worth of downside move, so that's 1128. So that's been more than achieved. Yesterday's low coming at 117.35. So that big downside move, correction move, and it sort of is unwinding some of these moves. And look at these momentum indicators now. We're now starting to see the stochastics coming in far more negatively configured in terms of correction, and certainly if you see the RSI, for example, falling below 49, which was the level it reached a couple of weeks ago. Just before it started the move higher again, I think if it started to go below 49, that would just confirm to me that we are sort of back in pretty much bearish control, really. The move that we've seen in the last few days is in this downtrend. That downtrend has been slightly tested today due to the fact that gold has basically consolidated, not due to the fact that gold is trying to rally. But look at these momentum indicators, still all negatively configured. RSI still sort of in the lower reaches, below 50. MACD lines now negatively configured. Stochastics also falling over, so maybe we're now going to see a return of the downside move. 122.30, very initial support, but I think obviously yesterday's low 117.30 is the main support. And then if you saw a break of that, you'd probably now see a test of that 109.20 support that we had on the 18th of August. Which was this sort of reaction low that we've seen. We saw it during this minor bout of consolidation within that rally. So it certainly seems to be that gold is more corrective than it has been, certainly for several days, and it looks like the bears are in control of this one now. Certainly near term with those three strong down candles or bearish candles. So in terms of sort of trying to regenerate the bullish upside pressure, you'd probably need to see break above these reaction highs, 139.60, perhaps even 146.60, which was this. Sorry, if I zoom in here, you can see it. 146.60, which was the reaction high just early doors yesterday, and that would be, that old sort of neckline area. So that would be where you'd start to see the sort of bulls regaining initiative. But until that would be seen, I'd say that you're pretty much in correction mode. So I wish you good luck in your trading today, and I will speak to you again tomorrow.